Recession-proof dividend stocks. The current global financial and political situations are indicating an impending recession. Inflation, along with the economic stress caused by the Russia-Ukraine conflict, as we all know. Analysts believe that taming inflation without a recession will be tough. Hello, everyone, and welcome back to Personal Finance for You, too. As U.S. inflation approaches a 40-year high, the Federal Reserve recently announced an increase in its benchmark interest rate within the target range of 0.75% to 1% after earlier announcing a lesser increase in March to manage inflation. Let's explore 5 recession-proof dividend stocks to purchase in today's video. According to a report in May, economists predict a 28% chance of a recession in the following year, up from an 18% probability evaluated in January. The stock market's fallen on recession worries, with the S&P 500 down 18.66% for the year and the tech-heavy Nasdaq down 28.28%. Rising interest rates typically cause investors to be hesitant to spend money in pricey sections of the market, causing technology stocks to suffer. Furthermore, the crypto market has lost about $1 trillion in value so far in 2022, despite the largest sell-offs in history. Because of this uncertainty, investors frequently resort to dividend-paying companies, which can offset the effects of volatile and tight market circumstances. According to the Bank of America, from 1990 to 2018, the S&P 500 dividend aristocrats achieved average annualized returns of 12.13% compared to 9.96% for the S&P 500 as a whole. Johnson & Johnson, the Procter & Gamble Company, and Bristol-Myers Squibb Company are 3 of the greatest recession-proof dividend stocks. Number 1, Pentair is a dividend yield of 1.72% as of May 23rd. Number of hedge investors, 37. Pentair is an American water treatment firm that offers its customers efficient and sustainable solutions. In its most recent Q1 2022 earnings report, the firm announced an EPS of 85 cents, up 24% year-on-year and above analysts' expectations by about 4 cents. Furthermore, its revenue of around $1 billion increased by 15.4% year-on-year. Pentair anticipates sales to increase by 9% to 11% in 2022 compared to 2021. Pentair announced a 5% increase in its annual dividend December 2021, and it presently pays a quarterly dividend of 21 cents per share. This was the company's 46th consecutive yearly dividend rise, making it one of the most dependable recession-proof dividend stocks. On May 23rd, the dividend yield for the stock was 1.72%, and following Pentair's solid quarterly earnings in April, Cowen set a $75 price objective and an outperform rating on the company. By the end of December 2021, 37 hedge funds tracked by Insider Monkey will have disclosed ownership in Pentair, up from 24 the previous quarter. These positions are worth more than $1.12 billion in total, compared to $844 million in stakes owned by hedge funds in the third quarter of 2021. ABM Industries Incorporated is an American facility management firm that delivers tailored solutions to properties of all kinds in urban and rural settings. Acquisitions have helped the corporation grow its presence. It recently bought Momentum Support in Ireland to bolster its main business. As of the fourth quarter of 2021, 20 hedge funds in Insider Monkey's database own $34.1 million in ABM Industries Incorporated. In comparison, 19 hedge funds held interest in the firm worth more than $44 million the preceding quarter. ABM Industries Incorporated declared a quarterly dividend of 19.5 cents per share in December 2021 after increasing its annual dividend by 3%. For the previous 54 years, the firm has increased its dividends in a row, with a 5-year dividend CAGR of 2.82%. As of May 23rd, the dividend yield on the stock was 1.72%. ABM Industries Incorporated reporting earnings per share of 94 cents in the first quarter of 2022, above analyst forecast by 16 cents, and as of May 23rd, they have produced an 11.1% return to shareholders in 2022, while 5-year returns were at 7.73%. Number 3, Johnson & Johnson has a dividend yield of 2.55% as of May 23rd. The number of hedge fund investors is 83. Johnson & Johnson's a global American corporation that manufactures medical equipment, medicines, and consumer health products. Analysts believe that healthcare equities are recession-proof because customers cannot stop spending on healthcare. In reality, healthcare firms outperform other industries during sluggish economic cycles. In its 133-year existence, Johnson & Johnson has survived 6 recessions. In 2022, the business announced its 60th consecutive annual dividend increase, this time by 6.6%, bringing the quarterly payout to $1.13 per share. On May 23rd, the dividend yield for the shares was 2.55%. And furthermore, Johnson & Johnson increased its adjusted EPS by 9.2% to $4.51 during the 2008 crisis, making it again one of the top recession-proof dividend companies. The firm reported an EPS of $2.67 in Q1 2022, which was 10 cents more than the market consensus. As of market close on May 23rd, Johnson & Johnson had gained 10.17% in the previous 6 months and delivered a 39.4% return to shareholders over the previous 5 years. Credit Suisse boosted its price target on the stock to $205 in April, with an outperform rating on the shares as the firm demonstrated development in its medtech business. Number 4, the Procter & Gamble Company has a dividend yield of 2.58% as of May 23rd. The number of hedge fund investors is 67. The Procter & Gamble firm is a large consumer goods company in the United States that sells a wide range of personal care and hygiene products. Wall Street analysts were pleased with the company's first quarter 2022 earnings, which showed a 7% year-over-year increase in sales to $19.4 billion. Jefferies and Barclays both boosted their price targets on the Procter & Gamble Company in April to $185 and $176 respectively. Furthermore, experts have collectively assigned it a buy rating. In Q4 2021, 67 hedge funds monitored by Insider Monkey owned holdings in the Procter & Gamble Company, totaling more than $6.6 billion. In the previous quarter, it was 69 hedge funds for a total of $6.4 billion. The Procter & Gamble Company reported 1.33 EPS in Q1 2022, exceeding analyst forecasts by 4 cents. The Procter & Gamble Company has been a dividend provider for 132 years and has a 66-year run of uninterrupted dividend increases, making it one of the most recession-proof dividend stocks. Number 5, Polaris Inc. has a dividend yield of 2.80% as of May 23rd. Number of hedge fund investors, 21. Polaris Inc. is an American manufacturer of all-terrain vehicles, motorcycles, snowmobiles, and electric vehicles. ATV sales increased from 370,000 units in 2018 to 850,000 units in 2021, demonstrating the industry's resilience in the face of global market circumstances. Furthermore, despite global financial turbulence, Polaris Inc. reported a 21% growth in revenue. Polaris Inc. increased its yearly dividend by 1.6% in January and now pays a quarterly dividend of 64 cents per share. The corporation has a 27-year track record of continuous dividend increases. As of May 23rd, the dividend yield on the stock was 2.60%, and Polaris Inc. earned around $2 billion in revenue in Q1 2022 and anticipates sales to reach around $9.4 billion in fiscal 2022 against the consensus of $9.32 billion. And that's a wrap. We hope you enjoyed today's video. If you did, please click on the like button and make sure you subscribe to our channel, and we'll have more videos for you. Thanks for watching.